All right. Good afternoon, everyone. It's 3 p.m., and we are delighted to welcome you to another insightful session on connecting the dots. First and foremost, our heartfelt thanks to our esteemed speakers for joining us today and contributing their valuable perspective to this panel discussion. Mr. Jogendra Singh, President and Group CFO at Hero Enterprise. Mr. Bhavik Bhimani, Vice President and Group Financial Controller at Thomas Cook India Limited. Mr. Ankush Akar, Senior Vice President and CFO at Datamatics Global Services Limited. And Mr. Venugopal Rao, CXO, Business Transformation and Technology at Alicon Castelloy Limited. We are honored to have such accomplished leaders share their perspective and insights with us today. To know more about our speakers, you may follow them on LinkedIn. The link are shared in the chat window. On behalf of HRAI, I also extend a warm welcome to our participants to this session on the impactful topic risk management in a digital world, cybersecurity, and financial protection. For more information about HRAI and upcoming events, please visit the links shared in the chat window. It is now my pleasure to introduce today's moderator, Mr. Venugopal, who will be guiding us through this discussion with his deep insights and expertise. Over to you, Mr. Ven.
Afternoon to you all. And thanks for the leaders joining this session to share their insights to the forum. We live in a time where financial resilience and digital resilience is inseparable. And particularly CFOs, financial leaders, or controllers, risk management now extend far beyond balance sheets. It includes taking care of cyber threats, regulatory scrutiny, supply chain vulnerabilities, and rising exposure from AI and digital tools. So, thanks HRA bringing this particular topic in a right time where Jaguar Land Rover has gone into the serious trouble at their supply chain as well. So that calls for something like a UK government has bailed them out. So cybersecurity is the one actually has become so important for us now because these hacking and such type of attacks are now become quite common. And now every OEM to who is associate companies, supply chains, tier one, tier two. So they are expecting people to have to follow cybersecurity policy. Same time they need to certify, they need to declare, and now I could see several their own forms they are now reaching various tier one to fill in and as well as to meet the demand. So it's a huge risk involved in it, where billions of dollars are likely to in India, it might be crores. So from that perspective, now there is another thing got added to the CFOs. So that's the way it is now. So let's keep this conversation sharing real experiences. I'll set the context for this one each question, and we will hear from the views from the esteemed panel members. So again, today's session is about exploring how finance leaders navigate this landscape. So how we protect our organization financially and digitally, how we balance investment with risk, and how we prepare for the unexpected. So once again, thanks, Jogendra sir, Bhavik, and Ankur. Finding. So we are just entering into risk landscape. I start with the. So my prompt will be like digital risk is not a just IT's headache anymore. It's squarely on the CFO's desk. Not just cyber attacks, but also fraud, breaches, and disruptions. Over to you, Bhavik.
Yeah, thanks, Venuji. Good afternoon, everyone. I would want to start with expanding the definition of digital risk. See, currently, digital risk definition is very expanded, I would say. Now, digital risk today is broader than just cyber security. Now, CFO must, now account for financial fraud versus digital channels, data governance risk, internal or external breaches, operational disruptions from technical failures or third-party vulnerabilities. Now, we need to understand today is that, it is not a business risk and not just an IT concern. So basically, everybody, whenever the IT breach happens, is generally the organization, more many companies are feel that it is a IT concern, but it is not. It is your business. It is a management concern. There are various types of digital risk today CFOs are watching, which first I would say it is a cyber attacks, of course, which consist of ransomware, phishing, especially targeting the finance system. Second would be on the financial fraud. There are sophisticated, business email compromise that is happening, fake vendor schemes, deep fakes in financial approvals. If I would give the example of business email compromise, see, I have seen come across that in one of the entity in past that we have got basically the entity have got the mail from the vendor stating that their account has recently changed the bank account, and subsequently the in that particular entity has transferred some fund. However, when lately they have realized that that was a fake email ID. Now, learnings out of this is basically that while whenever there is a change or in the bank account or anything pertains to the vendor or customer, you need to make sure that there will be a offline conversation that you do. That will really help you to make sure that those are the same person who is responding to you via mail or any other mode of communication. Another angle is, of course, the data breach, which regulatory exposures are also there in terms of brand damage, insider threats. Now, there are operational damage disruptions also, which could be in the name of cloud outages, failed ERP upgrades, or AI system errors and third-party risks, basically. So that was the one angle what I was wanted to talk about. Second is why CFOs are uniquely exposed currently, because custodian, they are custodian of financial data and transactions. They are now targets as well as the defenders. Increasing reliance on automated systems that we see, real-time payments, cloud-based ERPs that we are using. So that is what the second angle what I wanted to brought in. Third is basically CFO's evolving role in the digital risk management. Now, currently CFOs are expected to be partnering with CIOs and CISOs, and risk oversight must be cross-functional. Now, it is not only one IT. It is, of course, you need to make sure that you coordinate and collaborate with all other departments and make sure that we are safely in the safe hands. You need to also advocate for the investment in the risk reducing technologies. So at the time of preparing budget, you need to make sure that we do proper investment towards the technology well in time. Championing the risk awareness digital transformation. You have to be part of that, which is what CFO is expected to be in the current era. Additionally, of course, because of the breach, there will be an impact on financial performance. A single digital breach can have a direct financial impact as well as there is an indirect. Indirect in terms of course, there can be fines, there can be legal costs, there can be loss of revenue. Indirect in terms of there can be erosion in your brand value, investor confidence will be shaken, stock price dips, and etc. Another thing, key risk mitigation strategies, what we should, as a CFO, we should follow is there should be zero trust architecture and tighter the access controls that we have. There will be a real-time transition monitoring for anomalies and the frauds that we have to do. There will be a training that will be needed for employees and the teams, to recognize social engineering and to be on the top of it. There can be a scenario planning that you might have to do in terms of cyber crisis simulation as well as the business continuity planning. Key messages what I want to leave the audience with is digital risk is not just an IT issue. It is a core financial risk. CFOs must lead from the front in aligning risk strategy with the business objectives. Now, there can be a proactive investment in risk mitigation pays off in the resolution and trust. CFO's role is becoming central to enterprise risk governance in a digital age. This is what I think on this aspect.
Thanks, Bhavik. It's such a elaborately explaining and making audience much more interesting because that's the way it is as of now. Another thing is now many are working from the Wi-Fi, work from home and other things like it was never previously when before COVID. So this increases further and much more CFO has become responsible IT department. So just follow question, Bhavik, for you. So like now it's a cost of security versus cost of breach. If we talk about how do you balance investment in cybersecurity with the potential financial and reputational cost of an incident? Because after these cybersecurity threats and other things have happened, so this actually AMC and all certifications have become much more expensive now. So what's a take from your side?
Okay, sure. So, see, first of all, we need to understand that security is not a cost center. Okay, it is a business enabler and a risk mitigator. Now, while cybersecurity may be seen as a cost line item, but not investing appropriately means gambling with much larger issues, potentially, risk includes can be a financial risk or a legal liability, or it can be a reputational damage or a loss of a customer trust. Now, this particular aspect, I want to add a couple of points. First, we need to make sure that we quantify the gap. Gap in terms of cost of a data breach and compare it with your current annual budget, the cybersecurity budget that you have plotted. Now, according to the IBM 2024 data, the global average cost of a data breach is now reaching to $4.45 million and significantly higher in some reputed industries. Now, how does that compare with your current annual cybersecurity budget? You need to make sure that you do this aspect first. Second, of course, you need to frame it in a risk reward decision. Now, cost benefit analysis you will have to do in terms of that what is your risk tolerance in terms of your organization, what is your return to origin. Now, what is your RTO basically? Return to origin means, if any breach happens, what are the days or hours or maybe, the time that you will take to be back to the normal stage. I think you will need to analyze that first to take any further, call. And accordingly, you need to do the cost benefit analysis for further steps to be taken. Third is reputational fallout is, of course, the long term. Now, customers and investors are quite, quick to penalize companies who are, there are breached, especially if it is, is due to the under investment in basic securities. So I think we need to make sure that we are equipped with well security plans, and of course, recovery takes years and not just quarters. Fourth, of course, when any breach happens, there are additional costs. Additional cost in terms of course, it can be a legal settlement, it can be a regulatory fines, operational disruptions. It can be a executive churn, and a class action of lawsuits often follow. Fifth is what I want to talk about is on the regulator and insurer are currently watching everyone. Okay, and because of that, you might have seen that there is a cyber insurance premium are rising. Now, regulators are asking tougher questions nowadays. The strong cybersecurity posture isn't just a protection; it's a table stake for doing business in a digital world. Sixth is what I want to, throw a light on the security as a competitive advantage. Now, more companies currently are using their cybersecurity maturity as a differentiator in the market, especially in the B2B contract and partnership or the vendor assessment. So these are the couple of points what I want to I felt that we need to look at as a CFO, and additionally just a final call out what I feel that it is extremely important to identify the critical applications which you really cannot afford to lose and secure them first to at least to start with. I think this is what we should do first thing so that we will make sure that we don't have much of impact in case the cyber incident happens.
Thanks, Bhavik. So I'm just coming to Ankur. So it's a collaboration with CISO because ultimately investments and budget raise has to be done by the CFO on the basis of board's approval. So risk is everyone's job always, but someone has to write checks, right? So that is always CFO comes in between. What does an effective CFO and CISO partnership look like in budgeting and prioritizing risks? Ankur, over to you.
Yeah, thanks, Venu. I see it's a important aspect to look at in terms of the risk is one of the biggest thing which as CFO we look at, and we keep looking at in terms of the identifying the risk, looking at in terms of what could be the possible mitigations for those risks. And cyber security, the cyber threats which are there, specifically in the current era with the digital and advent of AI, all those things are the risk is increasing day by day. So the partnership and collaboration with the CISO becomes a key element. And personally, the way I have been looking at it is in terms of this is one investment. It is not luxury or optional. It is an investment that you have to keep doing for sustainability of the organization. It is that critical. And we keep working on a regular basis to look at in terms of which all new tools which are there in the market, what is the kind of risk threats which are there, what is the strategy and mitigation plan which is there, and what investments which are required. And we keep prioritizing those investments on a regular basis, looking at in terms of different operational efficiencies in the business to fund those investments and drive it. So that becomes a key element, and we continue to drive it. It's a partnership and collaboration, closely working together.
Yeah, thanks, Ankur. Well explained. So I'm coming back to Jogendra sir. Like regulatory pressures these days, it's too many from the OEM side, and now maybe in future something else will come. So primarily, regulators are making cyber a compliance obligation, but agility is still vital. So, sir, it's like how can finance leaders ensure compliance without slowing the business?
So I think, what is very important, as, my other panelists have said, that today we have to very clearly understand that the digital risk today is not a technology problem. It's not even a financial problem, I would say. It's a business problem. It's a business risk. So therefore, when you try and look at it and you look at, certain businesses which are very heavily dependent or are regulated. So I'll give an example of, our business, which is insurance broking. So insurance broking is quite a heavily regulated, business. And when you deal with this kind of a business where you're dealing with data of the individual, so there are privacy issues. You are dealing with volume of data. We do close to 1 crore policies every year. And you have the variability of the data, the velocity of the data. So all of these come together in a confluence, and they create a very major risk. And we have to ensure that we put ourselves on a very, very strong footing as far as these issues are concerned. Issues like DPDP and things like that have become very, very important, for all of us, especially in India now. So therefore, it is very important for us to, number one, recognize that there is a problem. Two, what is the scope of this problem? How do you ensure that you are putting it into a specific category? How do you see that problem? And what are the steps that you're initiating to ensure that all these problems are mitigated? We have seen the impact of these kind of risks is immense the Toyota had to halt production across 14 plants very recently, because of a single supplier was hacked. And 1 day of downtime cost them about 13,000 vehicles. The kind of impact on one side on the operations and on the other side on the regulator side, the kind of penalties that have been put across by, DPDP Act for that matter are, they can go up to 250 crores, they say. We have seen that in some cases, IRDA, when they start talking about penalties, they start with a few crores. There is no question of any lakhs or anything. So therefore, the risks are very huge, and it is very important for all of us, all the businesses, to understand that we look at the regulatory aspect of this. So regulatory aspect is, one is you look at privacy, two, you look at reporting, and you have to also ensure that how resilient your system is. So financial fraud in today's world, when you are dealing with so much of digital, is really too much. So therefore, you have to make sure that you work with your teams, you collaborate with the technical partner, which is CISO. So CFO, CISO work together, and they create kind of a framework. They create kind of guardrails within which you work to make sure that the kind of regulatory problems, that come to you, they are away, because some of these problems can be existential problems.
Thanks, sir, giving a right perspective. So I'm once again coming back to Ankur. Many attacks now come through suppliers. How can CFOs build resilience across the ecosystem?
I think it's in the today's era, we are not only working within the organization, okay, the partners, the channel partners which are there, the vendors which are there, help you run the business, sustain the business, and add value to our customers. So it's a critical area for all of us to look at in terms of how we do the vendor registration, the kind of validations that we are doing. How are we ensuring in terms of, one, we always look at their financial stability, the health of the balance sheet which is there. But it's not only the financial stability. What we also need to look at is in terms of how mature they are from a business perspective, how mature they are from an IT infrastructure perspective, the information, the data flow which is happening, are they secure or not? Joginder sir highlighted about the insurance broking. Now, in today's world, whenever you basically go for an insurance, specifically the cyber insurance, the first thing what the insurance companies will come is they will test your systems, your processes, and they look at in terms of what kind of controls that you have in place. And based on that, they will define in terms of what kind of exposure they are ready to take, what kind of changes they want in your systems, processes, architecture, which basically gives them the confidence. And many times, if your controls are weak, they basically simply don't give you any insurance. Specifically in the industry where I am in ITS, when you are working with the customers in US, Europe, UK, and even in India as well, the first and foremost thing is in terms of this is the minimum insurance coverage that is needed. And if you don't have an insurance coverage, that means you can't sign the contracts with the customer itself. So it's that important that from an existence perspective itself, you need to ensure in terms of you and the partners who are there in your journey are well covered from a risk perspective.
Okay.
And
Thanks,
just to
Ankur.
give you in terms of I'll share one example, and I think Bhavik also sort of touched upon, which is slightly the different way. One of the customer that we were dealing with, they received an email impersonating that it is from the organization, stating that this is the revised bank details which are there. The customer looked at it and started making payment in that. when we have observed that we have not been getting payment, we started following up. For that, they responded in this, we have already made the payment. And when we have got into the details, uh, uh, it's a impersonating where they have not been able to validate in terms of that somebody from the organization is rightfully informing them for the changes. Have they validated any documentation for that change? And without that, they have gone and started making payment. They have lost the money. We have lost the money, and it's becoming difficult even from an insurance perspective as well in terms of which insurance will cover it.
True.
Thanks, Ankur. So now I'm coming to Jogendra sir for the much more elaboration, because this is the again a very hot topic these days about the cyber insurance. So cyber insurance, whether it is actually a peace of mind for the CFO or a false sense of security for the organization. So if I take this as a prompt, sir, what should CFOs look for in these policies? And are they a substitute or just a complement to the strong controls, whatever we have currently? Sir, you are on mute, sir.
I'm sorry. Yes. So first of all, basically we have to really see why do we need cyber insurance? Cyber insurance today is more of I take you to the era when we used to take D&O policy, director and officers liability policy, and especially it took off after the independent directors came on board. Specifically, everybody used to say that you need to take a lot of you need to take that insurance because there are regulatory risks have really gone into too much. So therefore, how do you really do that? But if you look at today's time, when in the era of AI and the kind of digital world, and when we talk about a digital first world, cyber risk has actually become a boardroom risk, and therefore cyber insurance, in my view, is fast becoming a very important and financial necessity. So the question basically is, how should CFOs view cyber insurance, as a kind of a compliance checkbox or a risk transfer tool or a, strategic part of enterprise resilience, So if I really look at it from IT problem to financial exposure, so cyber incidents are no longer a technical issue. We talked about it, the kind of instances which are coming today and the pace at which these are coming today, they are directly impacting not only the business continuity, they're also talking about reputational risk. We are also talking about shareholders' confidence. So each incident, is costing up, in excess of about $4 million. So if you look at the impact, that is very high. So therefore, cyber insurance, in my view, provide that financial cushioning for these kind of high impact and low predictability, risks. And it has to be taken as part of the integrated, risk strategy and not, and should not be a substitute for cybersecurity. So cybersecurity at its own place has to be there. Today, every businesses, if you go to any company, you have a data layer, you have a process intelligence layer, and then you have a AI layer on top of that. And so first of all, you have to make sure that cybersecurity is in place. And to complement that, for the risk mitigation, you take cyber insurance. So cyber insurance, in my view, CFO should ensure this policy alignment with actual risk exposure. We'll have to see how much risk exposure would be there and how much, coverage can be there. The kind of things, you asked, what should we evaluate, in cyber insurance? In fact, only a few months ago, we also created a product for cyber insurance. So first of all, he said, you quantify what is the cyber risk that you perceive. That is the first thing. So therefore, you understand how much insurance you should take, what should be the value that you should be insuring it. Second thing is, I would say more than inclusions, you should look at exclusions. Please check all exclusions very, very carefully. So there could be some exclusions like, third-party software, or, this could be nation state attacks or things like that. You have to make sure that all the important items where you see the risk is coming from is covered on that. Make sure that you try and run this scope and coverage annually, so that this is not something which is a very static risk. This is a very dynamic risk. And then CISO and the risk officers, the CFOs will have to really work together, on this, taking it a completely as a strategic value, and CFO must lead this cross-functional evaluation of risk exposure versus risk coverage. You look at the integration of premiums with claims data and create some kind of, enterprise risk dashboards. Most of the companies today have risk committees. So on these risk committees, you should specifically ask for CFOs do that, in all our companies to do that, while we do the risk presentation on every board meeting, we look at what are the risks coming from, and the risk would be from operational risk, strategic risk, and as part of strategic risk, we include, cyber risk. So in a conclusion, or in a nutshell, I would say in the AI-driven and very hyper-connected era, cyber insurance is a strategic hedge. In my view, it's something which has to be covered, but it should be taken as a complement to cybersecurity measures. It's both a risk transfer mechanism as well as a signal of financial foresight.
Thank you, sir, for such a elaborated perspective. Just one more, we are coming back to you for the data and AI exposure. So AI actually accelerates finance, but also opens a new risk frontiers. So taking this into the account, what new categories of cyber and financial risks are emerging with AI adoption?
That's a very interesting thing. When I really look at, this area, and I look at the AI adoption and acceleration in almost everything, it really looks like, what you call a Christopher Nolan's movie, CFO versus machines, the battle for the balance sheet kind of a thing, that's how I truly define it. So today, of course, the kind of categories that are coming up in the cyber and financial risks are really new, and every day it's a very dynamic world, and new categories are really emerging. And these are because of the sophistication of AI, how it is evolving every single day. And you have to proactively address them as part of holistic risk management strategy. So World Economic Forum, had said in one of their, report that AI has a dual nature as both a catalyst for progress and growth and a source for risk. So you have to really see it from that point of view when you take advantage of whatever is coming up through AI. And there are a whole lot of things, where it is absolutely very, very necessary when you have the kind of volume and variability in our data. Let's say an example of our manufacturing facilities where both volumes and variability is very, very high. AI would be very, very important and a very good friend. But you have to be we have to make sure that you look at all kinds of risks associated with it also, whether it is coming in the form of third-party exposure or any kind of cybersecurity measures, in that sense. And if I really look at, what are these different categories? So one is AI augmented frauds. I think today it's no longer, everybody has really faced it. Fraudsters have used AI. They're becoming, one step ahead of us. So there is a race always who's ahead of whom. So they create some kind of they craft, some kind of hyper personalized phishing emails. And Ankush gave, example of the CFO's mail and a similar, mails people have received, which are very, very phishing emails and create very convincing deepfake video calls, which are coming up. So that's AI augmented fraud is one category. The second category, I always see is a synthetic identity attacks. Again, these criminals combine real and AI generated, data to form synthetic identities. That's an important risk category. The third could be AI-driven market manipulation. Today, we see a huge amount of market manipulation, automated trading, and in last one month or so, SEBI has also taken a very specific stand on the kind of algorithm driven trading. So these kind of areas again are very important. Then there are something what we call data poisoning. So data poisoning is again something which is very important. You manipulate the biased and you put in the biased data for the AI. AI is as good as, the data it is trained on. So therefore, if the data that it is trained on has been manipulated, that's, data poisoning in a way. So it will throw a very biased kind of, results. So that's another one. Regulatory and compliance risk, we have already discussed that in today's world where, we are dealing with a whole lot of regulatory businesses and, in our group also, we deal with insurance broking as one or, regulated entity. There is another entity which is a real estate company, which is also RERA regulated. So in that kind of a RERA regulate or, regulated entities, you have to truly ensure the transparency, explainability, and fairness in the AI-driven decisions. And the last thing I would say, again, operational dependency on third party. So these third party risks must be done very, very carefully using all kinds of tools, whether it is audit tools or, you talk about, so it's the CFO's imperative is absolutely to embed AI's, savvy cyber risk management.
Yeah, yeah.
That is something we'll have to really come off.
Yeah, very rightly said, sir. Actually, whenever you opt for a AI tool, you are open to the data. And it's very difficult to say which AI tool actually is protecting your data and nothing is going out of the system. So even the famous ChatGPT side also, if you see, he clearly said confidential data and regulation data and financial data, you should not even post it and you should not do it. So from that perspective, it's a huge risk associated with that. We have to be lot careful. The recent, which just I like to, the Jaguar Land Rover, which took place, it was with TCS, right? So they also must have definitely having a lot of cyber security side and many other things, but still they could not do it. So this is actually throwing a challenge that now every time a hacker and other people, they are actually much more advanced and they are far better technologically advanced than us. So this is a huge risk, actually well explained, sir. But definitely this is a live question which I expect some questions also from the people. So now I'm just going back to Bhavik. Uh, See the same thing I'm just saying. Despite our best controls, breaches will happen irrespective of whether it is a cyber security, a risk, or any other thing. Also, everyone try to find a other way of doing the things and breaches. So, if a breach occurs, what role should the CFO play in crisis response and recovery? Bobby, over to you.
Yeah, so thanks. I think in the cyber crisis, first we need to understand that CFO becomes a co-pilot and not just a normal passenger. Okay. Now CFO must step in into the active leadership role here, and not after the incident, but at the real time. So now they become the bridge between the cyber team, cyber response team, and the boardroom. So translating the technical aspect into the financial reality. A couple of points what CFO should ideally do in their role as a crisis in the recovery. First, CFO need to ensure that there is a liquidity management. Now, ensuring the funds are available for immediate response. It can be a payment of ransom payments, it can be a legal fees, it can be a forensic consultant fees. Second is on the cash flow impact. Now, of course, because of the breach, you need to analyze and forecast the business impact and how operations disruptions will affect your revenue, payroll, and supply chain payments. That is the second thing. Third one is, of course, the cyber insurance, coordination. Now, once you hit by the cyber breach, you need to make sure that you are timely, coordinating with the cyber team and activate the policies, manage claims, documentation, and etc. Fourth is on the vendor risk response. Now, you need to evaluate exposure from third-party vendors and potential shut off, payments channels if required, if that is compromised. The CFO must assess, the financial exposure within what I feel is within 24 hours once breach happens.
Yeah.
So then only you need to be that quick to analyze and take the further, corrective actions. Another angle is, of course, you need to communicate with the relevant stakeholders and regulators on timely basis. Now, it can be your investor relations, preparing the financial disclosures, managing the earning calls, mitigating the stock impact,
Yeah.
regulating regulatory reporting in terms of compliance with disclosure obligations. And there can be, of course, you need to inform your audit and financial, the auditors as well as internal, as well as the external, and to assess damage to the financial systems. So basically, your financial, statements are only as credible as the integrity of the system, behind them. The cyber breach puts them that credibility at risk, is what I feel. Additionally, on the long-term recovery and resilience and business continuity planning standpoint, of course, CFO need to make sure that there will be a reforecasting that we need to do in terms of update financial forecast, operational budget, capital planning based on the post-incident conditions, resilience investment, which I've mentioned that you need to leave the budget decisions for enhance the cybersecurity, cloud redundancy, and business continuity tools. You also need to rebuild the trust. You need to rebuild the trust with your partner, with the CMO, CEO, to restore the customer, investor, and the brand confidence, basically. So recovery is not just about restoring the systems. It is about restoring your stakeholders' trust, is what I feel. Um, Another aspect, what I feel that CFO need to rehearse for cyber crisis is a CFO who protects the shareholders' value and when it really matters actually. So you need to actually rehearse this cyber crisis well in advance, so that you will be you'll be ready whenever it happens. This is what I felt on this part.
Thanks, Bhavik. Very right perspective you have given. So this is the last question. After this, I think some 6 to 7 minutes will be available for the floor is open for the question. But 2 minutes we'll invest in this, like future outlook. I start with Anchor. So risks actually evolve, but so do defenses as well. So looking ahead, what one digital risk keeps you awake at night, and what one strategy gives you the most confidence?
I think risk is something which and we have discussed at length in terms of the cyber security with the advent of AI, the kind of situation, the kind of platform which hackers are using nowadays, the deep fake, which is something which again plays a role where you're not able to differentiate whether you are talking to a real person or an AI. So it's becoming more and more critical for us to have the culture, the organization culture, which basically ensures in terms of everybody in the organization is aware about the kind of risk which is there, how we are mitigating it, what Bhavik talked about in terms of the business continuity, and in case of any disaster or any hacking happens or any cyber security threat that is there, what is the kind of response which we have to give. And it is not only the one person or few team members in the organization who has that role, it is everybody's responsibility. So uh, in my perspective, it's basically the organization culture, the way we build it, and everybody, it's engraved in terms of the kind of risk which is there and what kind of actions which they need to take on a day-to-day basis to mitigate that risk. That's, I think, is something which I always constantly work with my leadership team here to ensure in terms of culturally we are mature enough to handle those kind of situations. We understand and differentiate between in terms of the actual kind of emails which are coming in versus the kind of possible threats which are there. And I think there's enough awareness which is there nowadays. So, which gives me at least the confidence, apart from in terms of the kind of financial controls that we put in, the internal controls, checks and balances which are there, the multi-factor authentication which is there in the systems. Uh, from a finance perspective, in terms of we always follow in terms of you need to have a maker checker kind of controls which needs to be there. From a banking perspective, there are dual signatories which will be there. So we always ensure in terms of there are controls, checks which has been built in, and continue to evolve to see in terms of how we can further improvise on that.
Well said, Ankush. Over to Jogendra, sir.
Well, I'll be very short on this. What keeps me awake? That's an important question. Say one digital risk that keeps me awake is the illusion of safety. Believing that my systems are perfect and they are secure because the breach has not taken place as yet. So in cybersecurity, silence is not assurance. It's often the calm before the storm. That's something you must always be very, very aware of. It's not the question whether breach will happen. You should be prepared for when that happens, what would be the impact. So therefore, formula is very simple. In God we trust. Everyone else has to come with evidence. So the zero trust policy on this is absolutely important.
Yeah, a few words from Bhavik for the
Yeah.
future
So
outlook.
what I want to add is, of course, in this bit, you need to make sure that you upgrade your front end system and the back end system well in time. And of course, that is one aspect. And additionally, of course, you need to make sure that you are very well covered in terms of the budget for the annual budget, what I would say, so that whenever it happens, there will not be any impact versus what you have not envisaged. So I think you will be our entire organization will be ready for that, to tackle that breach, and there will not be any additional impact. What I feel to the bottom line, since you are already covered by through way of budget.
Yeah. Thanks, Bhavik. Such an insightful session. So, floor is open. I could see some two questions already there in this one chat box. So, Faisal,
Yeah,
can
yeah,
I
you can
read?
take that. Yeah, yeah.
Yeah. So, I think Nidhi Gajar is asked something like, what role do you see technologies like blockchain playing in enhancing financial protection and data security? So Nidhi, can you just you can take out something like are they allowed to open the camera so that we can see her?
Yeah, they are, but actually they are working from office, so it's difficult to
Okay.
see.
Okay.
Yeah.
So
So,
anyone just like to have a perspective on this?
Ankush, I think you would be good to answer this question,
So see,
technical question.
Personally, if I look at the blockchain, is something where I have logically seen in terms of it has is Bitcoin and those cryptocurrencies which are there. Okay, I am personally not a big fan of that crypto or blockchain kind of this thing. So, financial protection and data security, it could have been a game changer, considering in terms of the way each interconnected things which are there. Uh, but it has not really evolved. Rather, we basically in my previous organization, we have worked on a subcontract management tool on blockchain based, but we have not been able to really take it to a mature level which where we wanted it to be. So I don't see a much of hype today, at least for the blockchain. Today everybody talks about only AI.
Exactly.
So
Yeah,
blockchain is
you're
all
right,
past
Ankur.
last hype which is there nowadays. Nobody is talking about, at least not that I have heard a lot about blockchain.
Okay. So the second
But
question is
but
from the,
one aspect I
sorry.
would add is in terms of definitely the digital currency aspect which is there,
Okay.
where the companies are definitely there. Rather, I think even our government is looking at in terms of whether they want to build something around this, which is not crypto, but backed by some central agency.
Okay. So thank you, Ankush. Like now, second one is Peterson Pereira. As quantum computing advances, how should organization prepare for its potential impact on encryption and data safety?
So that's also, quite a technical question. But primarily what I see is, it's there, yeah. So what I primarily see is that quantum computing, as it is evolving right now, I don't really see it much in the public domain. But this is definitely threatening some very widely used, some uh, public key cryptography kind of things with some very powerful or fault tolerant, machines kind of things. So we have to be ready for this, but not so much is available on the public domain as yet for use. So therefore, it's very difficult to truly see what would be the impact. And currently, since it's completely changing the dimension of the way computing is to be done, so I can only see that there would be a major impact. What and where those impacts would be, difficult to say until this comes into a wide use.
One thing that I can add is in terms of at least the organizations also. Nowadays, when you look at the earlier, it used to be like maybe a 6 letter password is okay, or 7 or 8. Now it's 12, 14, 16,
Yeah.
and that too with multi-factor authentication. So
Yeah.
at least the organizations are also preparing in terms of how they can at least potentially safeguard the employees and the organization against these kind of threats which are there. And they are definitely a threats, but there are, I think, solutions which are also coming in.
Yeah, I agree. And Ankush, we all must have, felt that when you are resetting the password, it will definitely not be done in one go. So I think, yeah,
That's true.
the controls, you will have to define the controls. Yeah.
Mr. Venu,
We lost Venuji, or is there? Is there?
mm, so no problems. I think we are done with the question. So thank you, Mr. Venu, for skillfully steering the discussion and ensuring a seamless flow of ideas and engagement. Thank you to all our esteemed panelists. Your insights and expertise brought great depth to the discussion and helped our audience gain a clearer understanding of the evolving risk landscape in today's digital era. The perspective you shared truly enriched the session and made it both informative and engaging. We look forward to welcoming you to our next session on the topic balancing short term goals with long term financial planning on October 16, 2025. With that, we conclude today's webinar. Thank you for being part of this journey. Wishing you good health, positivity, and success until we meet again. Take care and farewell for now. Thank you, dear speakers, once again. It's been a real pleasure having you with us.
Thank you.
Thanks all.
Thank you,
Thank you.
Faisal.
Thank you.
Thank you,
Thank you.
everyone.
Thank you.
Thank you, Jogendra sir. Thank you,
Thank you.
Kush.
Thank you.
Thanks, Venugopal.
Yeah, thank you.